hasn't been a good 2020 for US-China relations. Things may have started with the signing of the Phase 1 trade deal, but it has only been downhill since then. There's been the constant attacks by Trump over COVID-19, discord over the treatment of Hong Kong, the tit-for-tat closing of consulates in Houston and Chengdu, the bans of US transactions to TikTok and WeChat parents ByteDance and Tencent, praise for Taiwan from Washington, and sanctions placed on 11 Chinese officials and the same number of US citizens by their respective superpowers. Meanwhile, the teased but never officially confirmed video conference trade talks between the USA and China that were meant to take place on Saturday were postponed indefinitely. Reuters is reporting that the delay has come about due to scheduling conflicts and the need to allow Beijing more time to buy up American exports, as dictated by the Phase 1 trade deal. It's hard to know how to take the delay. In a sense, given the chaos of the last couple of months, it has at least prevented things from getting any worse. However, the fact that the two superpowers couldn't come to the table despite having a laundry list of things to discuss is perhaps worrying about how things will move forward in the coming months and whether we will ever see a Phase 2 trade deal put in place. It does, however, also leave the US markets feeling fairly aimless heading into the third week of August. We're at the other side of the second quarter earnings season. Investors have seen the damage done to GDP across the same period, with Japan the latest country to report a record contraction in the second quarter. And things between Beijing and Washington have cooled off, if only compared to how things were in the last couple of weeks. Will that mean a return to COVID-19 focused trading? America's just passed 170,000 deaths caused by coronavirus, with cases now well above 5.5 million. But investors do seem broadly inured to pandemic headlines at this point. Not to say that a flare-up in anxiety is impossible. Those, do seem to come about almost at random. But overall, the day-to-day churn of coronavirus headlines, the markets do seem to be used to at this point. How about the economic calendar? That could dictate movement, perhaps, but perhaps not till the end of the week. Monday sees the Empire State Manufacturing Index. That's expected to pull back from 17.2 to 14.6 month on month. Tuesday's building permits and housing starts numbers are both forecast to improve at 1.33 million and 1.23 million respectively. As for Wednesday, there's also the latest FOMC meeting minutes to pore over in terms of seeing what the Fed has planned for coming months and whether it will unleash some kind of more fiscal stimulus in the next meeting. Moving on to the juicier stuff, Thursday is the latest unemployment claims reading. The most recent reading fell below the 1 million mark for the first time in 21 weeks. Can it stay there, I guess, is the big question. Analysts are expecting 990,000 new claimants on Thursday, meaning it's right on the cusp of, going back towards 7 digits. Friday, finally, is the biggie with the flash manufacturing and services PMIs. The most recent readings have the manufacturing and services sectors edging back towards growth at 50.9 and 50.0 respectively. Both readings should hopefully keep climbing in the right direction. The manufacturing PMI is estimated at 51.6, with services lagging behind at 50.7. The state of those PMIs could then dictate how the Dow Jones and the rest of the US markets wrap up this week.